Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect, and your financial growth. The bank promotion exams 2025 2026 are your golden opportunity, and I am here to make sure you grab it with both hands. In this journey, we will learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success does not come to those who wait, it comes to those who prepare. So let's start today. Prepare smartly and make your promotion in 2025 2026 a reality. Welcome to part 3 of my Path to the Corner Office 2025-2026 series, where we break down real bank promotion exam questions and give you clear, practical sample answers about case studies and group discussions to help you climb the career ladder faster. Case studies 21 to 30. Case study 21. The macroeconomics shock response. Scenario: liquidity crunch due to a downturn. Challenge: as head of treasury and ALM, what is your strategy? Solution framework: liquidity preservation. Slow down new long-term loan disbursements. Increase holdings of high-quality liquid assets like GC. Actively manage the liquidity coverage ratio and net stable funding ratio. Fundraising: issue certificates of deposit or bonds to raise wholesale funds. Launch special high-cost deposit schemes for a short period to attract bulk deposits. Contingency plan: draw down pre-sanctioned credit lines from other banks or the RBI as a last resort. Communication: reassure the market and rating agencies about the bank's strong capital and liquidity positions to maintain confidence. Case study 22. The core banking system overall. Scenario: sponsor a rupees 500 crore CBS replacement project. Challenge: what are the key risks and governance structure? Solution framework: key risks. Technological: vendor capability, integrations with existing systems, data migration. Operational: business disruption, staff training, customer impact. Financial: cost overruns. Reputational: failure of the new system. Governance structure: steering committee chaired by a whole-time director including sponsor, CFO, CTO, and COO meets monthly. Project Management Office PMO day-to-day management reporting to the sponsor. Working groups for each stream: technology, process, data, change management. Phased rollout: pilot in one non-critical region first, learn from it, and then roll out pan-India in phases. Case study 23. Navigating a regulatory sanction. Scenario: regulator has penalized and restricted the bank. Challenge: develop a comprehensive response plan. Solution framework: immediate regulatory compliance, accept the order without dispute, pay the penalty immediately, submit a detailed time-bound action plan to the regulator to fix the identified KYC AML gaps. Internal overhaul: conduct an independent external audit of the entire KYC AML framework. Invest in advanced AML transaction monitoring software. Retrain every single employee involved in onboarding and operations. Business continuity: during the moratorium, focus intensely on deepening relationships with existing customers through superior service and digital engagement to retain deposits and wallet share. Reputation repair. Launch a trust rebuild campaign highlighting the bank's renewed commitment to compliance and security. Case study 24. The future of banking strategy. Scenario. Define the bank's strategy for the next decade. Challenge. Present your vision for the bank in 2035. Solution framework. Vision to be a trusted financial ecosystem seamlessly embedded in our customers' lives. Proposed model. A platform-based manufacturer. Manufacturer. Continue to manufacture core banking products, loans, deposits, payments. Platform. Create an open API-based platform where third-party fintechs, insurers, and wealth managers can offer their products to our customer base. Core competencies to build: data analytics for hyper-personalization and risk management, API management, and cybersecurity. The bedrock of the platform model: agile culture to innovate and partner at speed. Monetization: earn fees from platform participants while retaining the core spread income from manufactured products. Case study 25. The M&A opportunity. Scenario. Lead the due diligence for acquiring a private bank. Challenge. What factors will you evaluate? Solution framework. Strategic fit. How does the target's retail and wealth management franchisee complement our own? What is the overlap in branch network? Can we achieve significant cost synergies? Financial due diligence. Scrutinize the quality of the target's assets through NPA level, profitability trends, and cost to income ratio. Is the valuation PN, PB, PE justified? Operational due diligence. Assess the compatibility of technology platforms, review their product suite and sales practices for any hidden liabilities. Cultural due diligence. This is critical. Is the target sales driven, aggressive culture compatible with our own more conservative, relationship driven culture? Cultural mismatch is a primary reason for M&A failure. Recommendation. Based on the above, provide a clear proceed or do not proceed recommendations to the board with a detailed justification and a post-merger integration plan outline proceeding. Case study 26. The unauthorized third-party payout. Scenario. A customer comes to you, the supervising officer, claiming that a third-party loan agent promised them a loan after taking an upfront processing fee via UPI. The loan never materialized. The agent is not affiliated with the bank. Challenge. How do you handle the customer's complaint and what steps do you take to prevent this for other customers? Solution framework. Empathize and inform. Listen to the customer patiently. Clearly explain that the bank does not authorize any agents to collect upfront fees and that this is a fraudulent practice. Formal complaint. Help the customer file a formal complaint with the bank, providing all details, UPI transactions ID, agent's contact. Use this to alert the bank's security department. Police report. Advise the customers to file an FIR with the local cyber police station, offering the bank's complaint copy as supporting evidence. Preventive action. Propose to display prominent signage in the branch and on the website. We never ask for upfront fees. Beware of fake agents. Case study 27. The family dispute over a joint account. Scenario. Two siblings who hold a joint either or survivor savings account approach the branch. One sibling accuses the other of siphoning off funds for personal use after their father's death. A heated argument erupts at the counter. Challenge. How do you de-escalate the situation? Notice the bank's legal position. Solution framework. De-escalate immediately. Escort both parties to a private room. Calmly state that the bank will follow the legal mandate of the account type. Explain the mandate. Clarify that in an either or survivor account, after the death of one holder, the entire balance belongs to the surviving holders. The bank is not party to any personal or family disputes regarding the use of those funds. Neutral stance. Politely refuse to get involved in the family dispute, suggest they resolve the matter mutually or seek legal counsel. Document. Make a brief note in the account stating that the legal position was explained to both parties to prevent future complaints. Case study 28. The suspected friendly fraud. Scenario. A customer repeatedly claims that debit card transactions on e-commerce sites are unauthorized and demands chargebacks. Upon investigations, the IP addresses and device IDs often match the customer's usual patterns. You suspect this is a friendly fraud where the customer is disputing legitimate transactions. Challenge. How do you handle this customer without accusing them directly while protecting the bank from losses? Solution framework. Fact-based discussion. Present the factual evidence, that is, this transaction originated from your registered device, in a neutral, investigative tone. Re-educate. Politely remind the customer about the terms and conditions of online transactions and the importance of safeguarding OTPs and card details, even from family members. Tighten controls. For future transactions with the customer's consent, implement lower transaction limits for online purchases or require an additional OTP for high-value transactions. Formal warning. If the pattern persists, issue a formal communications that repeated invalid disputes may lead to the restrictions of the card's online facilities. Case study 29. The rush hour cash crunch. Scenario. It is the beginning of the month and there is a long queue for pension and salary withdrawals. Two cash recyclers at your branch have developed a technical snag, leading to excessive wait times and customer agitations. Challenge. What is your immediate action plan to manage the situation? Solution framework. Communicate and manage queues. Immediately deploy staff to manage the queue. Use signage and announcements to inform customers of the delay and the estimated resolution time. Mobile resources. Reroute customers to functional counters. Mobilize all available staff, including back office personnel, to handle cash transactions manually under dual control. Arrange cash. Contact the currency chest or a nearby branch to arrange for urgent additional cash if needed. Tech support. Assign a staff member to continuously follow up with the IT engineering team to fix the machines, providing real-time updates. Case study 30. The employee's financial distress. Scenario. A junior employee under your supervision has started taking frequent, short duration unofficial loans from colleagues, causing discomfort in the team. His work is also beginning to slip. Challenge. How do you address this sensitive issue? Solution framework. Private counseling. Have a confidential, empathetic conversations. Focus on his well-being, not the loans. Say, I have noticed you seem stressed. Is everything okay? Offer official channels. Inform him about the bank's own staff loan or advance salary facility as a proper channel for financial needs. Set professional boundaries. Firmly but kindly advise that borrowing from colleagues is unprofessional and can disrupt the work environment. Monitor performances. Keep a close watch on his work. If performance does not improve, transition the discussion to a formal performance improvement plan. Thank you very much for your patience. Request for like, subscribe and share.